What's happening, man? Welcome to the Ironworth Trading Show. I'm your host, Said Priced In, Coach Price. How y'all doing tonight? Nothing in this live stream is financial advice. This is not financial advice. This is for educational and entertainment purposes only. Now, y'all come on in, chill out. You know what I'm saying? It's a little late, but it's all right. Y'all know how we doing it. Y'all know how we do it. We're going to do it a little different, though, but still, y'all know how we do it. We're going to talk about a lot of stuff, but mainly something that most traders never get because don't nobody ever slow shit down long enough to teach them, and that's how the market actually think. Tonight, we're going to unpack everything in the world, everything that's happening in the world, at least as far as the stock market goes. NVDA earnings, the flood of economic data that we got coming in after the shutdown. We got the Federal Reserve, got some speeches coming out and shit, and yeah. We're gonna even talk about the shit that's in the politics that's circulating. And we're gonna do it through the eyes of a real trader, so you know how a professional would think. We're gonna look at how someone who used this information to make decisions, how they react to it, okay? I want to show y'all how to be a profitable trader. Most people see news as entertainment, right? But we're going to see this shit as opportunity. Y'all know how we get down. Most people hear events. We hear direction. Most people see chaos. I see patterns. I see pride. I see power. I see a badass that don't take nothing from nobody. That came from, who know what movie that came from? Put it in the chat if you know what movie that came from. But yeah, tonight I'm going to show y'all how to transform your mind from being overwhelmed with the market, right, or during a trade or whatever, to being strategic, from being confused to being confident. Instead of being reactive, I want you to be controlled. We're going to take our time. We're going to breathe through this shit because you'll be amazed how many times you get in the trade and you holding your breath. Y'all, how many times y'all get in the trade and your heart was beating or you sweating and shit? No, for real, you got to take your time. You got to breathe. I want y'all to pay attention to your breathing this week. If you think I'm bullshitting, just monitor how you breathe while you entering the trade, while you in the trade, and when you getting ready to exit it. Options or futures, either one hood to Wall Street. Both, either one. We actually watch the futures pre-market, right? After market, we pay attention to the futures to determine, because it's trading the future price of these commodities. You know what I'm saying? It ain't always right, but it's still tracking it, right? But yeah, we're going to breathe through it all. We're going to break every piece down so simple that even somebody who completely new to this shit going to be able to walk out with clarity. Y'all know I'm smart because clarity is the most powerful thing you can have whenever you trading. So yeah, we're gonna start out with the giant, the king of the whole thing, the heartbeat of the whole AI revolution, fucking NVIDIA. I didn't have to say the F-bomb, but yeah, NVIDIA. It's not a stock. It is a stock, but I'm saying this is not just a stock. It's a phenomenon. This company is so big, so influential, that they earnings report alone can swing the entire NASDAQ, the entire semiconductor sector, the entire AI sector. I mean, yeah, the whole AI industry. What up, Adrian? What's happening? No, for real though. I think, look, as soon as I say NVIDIA, Adrian pop up. You know you love NVIDIA. No, for real though. Yeah, this is a big one, right? This company is big. It's powerful. It's a powerful company. And on Wednesday, November 19th, as soon as the market closed, which is like 4 o'clock Eastern time, all right, NVIDIA gonna release their Q3 fiscal year 2025 earnings report. And let me see. Well, who else coming out with earnings on that day? Do y'all know? These are all the companies coming out with earnings around that time. So yeah, so they coming out with earnings, and this is not just another earnings report though. This is the moment that the market has been waiting on, y'all. It's the moment where we pretty much been preparing for this whole time. It's like this gonna tell us whether the AI trade that everybody been talking about still got a steam or if it's starting to cool. It's gonna determine whether this shit in a bubble or not. If the bubble about to pop or if it's gonna keep blowing. Listen, I'm gonna teach you some shit that a lot of traders don't know. The market don't move on earnings. They move on expectations. I taught y'all that before. Expectations are extremely high for NVIDIA. That means, can anybody in the chat tell me what does that equate to? It starts with a V. It starts with a V. And I'm letting you know now, expectations are extremely high for NVIDIA. The answer is, that's right, Sandy. I ain't even had to say it. Sandy. That's right. There's a lot of volatility, so expect that. Okay? The power of execution. We know what to look for, so we know what to expect. According to FactSec, a lot of people expecting NVIDIA to report their EPS to be 1.25, their revenue to be 54 billion. That means compared to last year, NVIDIA is expected to grow as far as their profits. They think their profits supposed to be up 54%. They expecting their sales to be up 56%. In a year now, that's insane growth. Some of y'all might not know, but that's insane growth. So it's really historic. Like, this the type of growth that's going to create trillion-dollar companies. Trillion-dollar companies. We talking about some shit that's under $200 a share right now. I don't even want to call it some shit. I'm gonna call it for what it is. We talking about NVIDIA, and it's under $200 a share right now in this time that we talking about it in. You're gonna look back in history and be like, damn, I could have got it for under 200. Right? I could have got it for under 200. But it's all right though. We about to crack. What's the word I want to look for? We about to unpack this. I just wanted to let some people come on in, y'all. It's all right. Let me let some people come on in. Before I get started, if y'all new here, hit the follow button. I appreciate y'all for being here. I'm almost at 7,000 followers, y'all. I think I need like 20 more followers. So if y'all could do me a favor and contribute to that, you know what I'm saying? You'll help me out. It'll be the HBO special, like my boy Kenny Brooks said. It's the HBO special, the Help a Brother Out special. Hit the follow button for me, y'all, please. So yeah. Now, if NVIDIA beat well, first of all, I want your trader brain to kick in before I talk about if they beat expectations or not. The question is not will they hit earnings. The question is, will they beat expectations by enough to get us all worked up? Because they beat it sometimes, but it don't mean shit. Just because NVIDIA beat expectations does not mean that they are going to go up or the market is going to pump. I've learned my lesson. I'm telling y'all now, don't think it works that way. All right. You feel me? If NVIDIA meet the expectations that they put on them, it don't give us a strong guidance necessarily, the stock could fall. If they beat expectations, but then they say growth might slow down, the stock could fucking fall. If NVIDIA crush everything, but they hint at, if they even say that demand could cool down later, the stock could fall. That's the irony of earnings season. I'm telling you. Thank you, D. What's happening? Appreciate you for joining the live. But yeah, that's the irony of it. So the numbers ain't enough. The story matters more. That's going to bring us to the second thing that I want y'all to pay attention to. We looking at the supply and demand for AI chips, right? Now, the CEO, everybody been talking about how he pushing Taiwan Semiconductor, which is the world's biggest chip manufacturer, to increase production capacity. I was telling y'all about TSMC, which is Taiwan Semiconductor, when this was under $200 as well, right? It's trading over 3 now. So we got to stop overlooking these stocks and stop saying, hey, what do I get into, or and it be right in front of your face the whole time. It's right up under your nose. And your money could have grew more interest than it would have in a bank in this stock alone over the past 2 years, right? This is not financial advice. I want you to go look it up for yourself so you can see for yourself. Now, because dude pretty much investing into Taiwan Semiconductor, I want you to think about that. The CEO of NVDA is begging the factory that make his chips to build more factories, to open more production lines, to expand faster than they planned. Why do y'all think they're doing that? Why do y'all think they're doing that? I'm serious. It's because demand is so insane right now, right, that they cannot keep up. They can't keep up. And that's the story that we want to hear right there. That's the signal that we need. That's what we want to hear. That's going to let us know that the AI boom still got a lot more room in it. The AI boom still got room. But right now, the market is doubtful as usual, right? We full of fear still after what didn't happen. We kind of traumatized from the $20 drops on the S&P and shit that they was having. Right? Them 5% drops in one day. Like, what the hell? We kind of we still licking our wounds, right? We uncertain. We don't know what the hell really finna go on. Don't nobody really got what they say. Don't nobody really got a crystal ball. I'm asking Nancy. Nancy gonna text me and tell me. I'm like, hey, Nancy, what the hell finna go on in the market? No, I'm serious though. I'm serious. When y'all know about supply and demand, right? I don't have to give y'all a crash course on supply and demand. Whenever there's, a demand for something, you feel me? You can make some money on. There's a high demand for AI right now. You looking at it like, look, we need to get this shit pumping. Real talk. NVIDIA stock hit a record high the day before my birthday, right? October 29th. They like, bro, we don't know your damn birthday. October 29th. And then it started falling, right? So not just NVIDIA, y'all seen it. The whole AI sector. AMD went down, Broadcom, Supermicro went down. They all pulled back. They all pulled back around Halloween. So when the sector pulled back before earnings come out, that's usually because we nervous. The market is nervous. When we nervous, when, volatility going to increase. When volatility increase, opportunity increases. If you know what the fuck you looking at. And tonight, I'm going to show y'all what to look at. I want you to understand the cause and effect, right? The historical weight of moments like this. What happens when shit like this happens, right? Because history usually repeats itself. There's earning reports that happen in history that shaped entire decades. Yeah. Daily Elijah, how do I feel about ACA November 21st? You tell me how you feel. So just pay attention to the volatility. I told y'all that's going to give you a lot of opportunity and it's going to help you out. But in the past, I want y'all to pay attention to moments like when Apple iPhone came out, like when Apple iPhone launched their earnings, when Amazon Cloud breakthrough, they had earnings that as soon as they had the Amazon Cloud come out, the earnings that quarter shaped an entire decade. Google first advertising surge, them earnings did the same thing. Tesla's first profitable quarter turned the market. And right now, NVIDIA is one of those eras. I'm telling you, this earnings report got the power to pull the entire market up or drag it down, right? It could either restore confidence or shake it. It's going to create momentum or it's going to kill it. I think the last 2-3 times NVIDIA had earnings, It was a fat ass nothing burger. I'm talking about a nothing burger. You thought it was finna be something, but it wasn't nothing. So that's why this dude, Mizuo, that's the managing director of equity trading, he said the success or failure of the entire AI deal hinges on this. Not 100%, but the impact gonna be huge. Now, before we talk too much more about NVIDIA, I just need to shift your attention to something that's just as important, right? Economic indicators, because we entering into a rare moment in American financial history, y'all. A government shutdown ended, and a massive backlog of economic data is about to flood the market. I heard the song in my head, "Open the floodgates of heaven." Rain. Looking at it. Hold on, I'm serious though. We about to find out a bunch of shit. We was pretty much trading in the dark in October. But yeah, this is rare. It's powerful because this can move the market just as aggressively as NVIDIA. The U.S. Bureau of Labor Statistics, the agency that controls jobs data, just came out and told us September non-farm payroll reports are going to be released November 20th. Real wages on November 21st. GDP revisions on the 26th. PCE inflation on the 26th, right? So that's a tidal wave of data. And every number going to affect the Federal Reserve's next decision in December. We're going to know if we're going to get a rate cut or not. What does the Fed control? Liquidity. Interest rates, the value of a dollar, the cost of borrowing, right? The appetite for risk, the price of technology stocks. The word borrow has always whooped my ass, y'all, since I was a child. I used to say Bari. But yeah, this is going to determine a lot of shit, right? Now, I'm going to teach you something important. In trading, when we talk about the jobs data, that shit equals demand. GDP, when you hear somebody talk about the GDP, that equals the strength. And when you hear them talk about PCE, that equals inflation. So together they form the Fed's decision framework. This is how they make decisions. So right now the market is nervous because the Fed's turned hawkish again. Hawkish, you got hawkish and then you got dovish, right? Hawks and doves, two birds. Hawkish means they see risk in cutting rates soon. And then a lot of the presidents in the Feds, like Collins and a couple other motherfuckers, I don't know the name or whatever, but you can look it up. They've been saying that cutting now is risky. It's a bunch of old milk looking dudes. You know what I'm saying? That's in the federal, that's in the Feds. But this pushed expectations for a rate cut in December below 50%. So why do we give a fuck about this? I'm not trying to nerd out on y'all. I'm trying to get y'all to understand something. This means that money is going to become more expensive. And when money is more expensive, right, the appetite for risk, the risk appetite going to drop. When the risk appetite drop, technology stocks start to struggle. When technology stocks start to struggle, NVIDIA feel it first. Yeah, NVIDIA feel it first. Y'all see how the pieces fit together? It's a web, it's a puzzle, it's a map. Your job as a trader is to read the map calmly, right? Not with emotional logic, with trader logic. Now, President Trump made a long-ass public statement about the Epstein files and about Republicans releasing them. We not here to debate politics. We here to learn how a trader interprets this shit. We do not ask, right? We do not ask, do I agree or disagree? We ask, is this shit gonna move the market? That's it, ladies and gentlemen. That's it, right? In this case, no. This is political bullshit. This is not market moving substance. I want to teach you why it doesn't matter to the stock market. Scandals rarely move the market. Drama rarely moves the market. This is not love and fucking hip hop. Social issues rarely move the market, right? I get it. He on some nasty, dirty shit. Like, you know, it's a special place for him, but we're not talking about that shit. We talking about what's moving the market. We trying to make some money. Not trying, we gonna make money. And don't think that shit got an effect in the market. Corporations don't change investment plans because of rumors. Traders don't change positions because of gossip. I had somebody tell me, I'm not trading that because of Trump. Yum, 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 yum. Okay, all right, whatever. Funds don't adjust billion-dollar models because of controversy. I'm just letting you know. But political tension can affect markets when it threatens laws or taxes or government spending, debt ceilings, shutdowns, inflation, tariffs, etc., trade deals. That's why we study the value of political news, not the drama. We don't give a fuck about the drama. Now, Trump's statement was him saying, focus on the economy, focus on inflation, focus on jobs, focus on Republican achievements. Whether someone agrees or not don't matter. What matters is that the market hears conversation shifting back to the economy. And when political attention shifts to the economy, what becomes more sensitive? Everything we just talked about. Inflation numbers, job numbers, market performance. Now the noise reinforces what actually matters, which is economic data, Fed decisions, NVDA earnings, right? The core of the market this week, what we really give a fuck about. That's why I wanted to talk about this tonight. I want your mind to absorb this slowly, clearly, and deeply, because every one of these things is colliding in the same week. NVIDIA, the economic data backlog, the Fed speeches, the FOMC minutes, political tension. This is a perfect storm of volatility. And volatility is what, y'all? Who been paying attention? What is volatility? I know you know what it is, but what does volatility equal if you've been listening? I want to see who paying attention. I know it's only 10 of y'all, but it's all right. It's all right. It's all right. Y'all tap the screen. I appreciate everybody that got me to 2.3 thousand likes. 2.3. 2,000 likes. Thank you. Thank you. I appreciate you for the support. And if you're new here, hit the follow button. Volatility equals opportunity. Volatility equals opportunity. Yeah. You got to know, you got to know, you got to know. Y'all got to know. All right. Matter of fact, I think I'm gonna just go ahead and pull it. Let's look at where NVIDIA is at right now. Hold on. Where's she at? There she go. There she blows. Excuse me. So NVIDIA is, like I said, it's a little under 200, right? It's still under 200 nonetheless. This won't be long. It won't be like this for long. Hey, put a W in the chat, y'all, if y'all want a cram course real quick. Y'all want me to teach you how to read a candlestick chart. Maybe y'all already know. If you already know, tap the screen 10 times for me. If you would like to know how to read a candlestick chart, drop a W in the chat right now. I'll go over this whole chart for you. Tell you what everything means piece by piece. But you're going to have to put a W in the chat for me. You got to engage. I need the engagement. Anybody but D. D, you don't count. You already locked in. I'll wait. I'll wait. Drop a W in the chat if you want me to go over this chart and show you how to read a candlestick chart real quick. Tell you what all this means. I'm going to give you what they call a chart analysis. This is a chart analysis for NVIDIA. Or y'all can tell me what y'all think. What do y'all see? Since y'all ain't saying nothing, y'all just, joining and not talking, right? Tell me, what do y'all see on this NVIDIA chart? Let's see. What is this? A 4-hour time frame. So each candlestick represents 4 hours of time. This is about 10 days. About 9 days. So, yeah, starting from today going backwards, yeah, that first candlestick at 178 over there, that's about 9 days ago. So between then and now, NVIDIA hit 201 and came all the way down to 180 just to go back up $11. So we at that midpoint is pretty much 50%. It's pretty much the 50% recovered from where it dropped from down recently. So 180 is this level of support. Support is the floor. I ain't getting started till y'all put W in the chat. I need to know y'all want this crash course. Let me know if y'all want a crash course on how to read a stock option chart. Not even stock option chart, a candlestick chart. You can use this information to trade futures with. You can trade stock options, or you can trade Forex if you want to with it. You can trade crypto if you want to with it. All right, Christina, that's all I was asking for. They act like they couldn't engage. You know what I'm saying? Hit the follow button if y'all new here, right? I need y'all tapping while I'm yapping. I'm going to describe. I just want you to know, also, if you're watching this live right now, type your location in the chat. You feel me? Let me know what city and state you listening from. It helps me out with doing my analytics or whatnot whenever I try to see where the most people are watching me from. That way I could make sure I book that area the next time I go. I'm gonna make sure I'm gonna make sure we get a seminar going in that area. It's always people from California, so I will be in California. It's maybe because I go live late at night, but yeah. I'm gonna describe every element on this chart, y'all. I got you. I want y'all to look at the top left. We're gonna start at the top left. It might be a little hard to see. I apologize. But yeah, at the top left, that's the ticker symbol. It's called NVDA. That stands for NVIDIA. That's the stock that we've been talking about tonight. That's the one we are analyzing right now. Immediately to the right of the ticker is the current price, printed as $191. $191.41 is how much it'll cost you to get one share of it right now. That price changes throughout time, throughout the day, throughout every second, especially depending on how much volatility it is in the market. Okay? Now, when you see a green number, the price is up on the session. When you see a red number, the price is down on the session. On this screenshot, the price reads 191.41 and a color indicating that the recent movement, right? The number updates in real time on the platform, but it's just letting me know it's up from where it came down from. All right. Now, I'm gonna explain the time frame. The 4-hour candles. If you look at the bottom, it say 4 hours. 4-hour candles. So that means from, let's see, the market opened at 9:30. So by the time 1:30 come around, you looking at one candlestick. What up, Cool Hand Luke? You know how we get down. I'm teaching first grade. You feel me? I'm teaching first grade. All the way up through middle school. So by the end of the show, we all back on a high school, college level type of thing. You feel me? But I just want to help the people who always wanted to know what the hell going on when they looking at the chart and they confused and they scratching their head. I don't like leaving them scratching their head. I was once that person, so I like explaining it. I really do. I enjoy explaining it. I find it quite easy to get anyone to look at this shit and help them understand it. And then you should be able to look at it. I did it in math class. Anytime they talked about a pie chart, graph chart, line chart, I was on that. I mean, that was my favorite thing. I made charts for fun. But before I was trading, I'll make a chart of how much I spend. You know what I'm saying? That charts are useful. That's all it is. But in school, we didn't pay attention to that. It was boring. They didn't make learning fun. You feel me? So a lot of people didn't learn. Now back to the lesson. 4-hour candlesticks. Directly under the chart, you can see the time frame selector set to 4 hours. I got it set to 4 hours. That means each candle on the main chart represent 4 hours of trading activity. Whenever you change a time frame, you change the scale of price action. So a 4-hour candle's gonna smooth out the intraday noise, because within that 4-hour candlestick, if I went down to a 1-hour chart, there will be 4 candlesticks within that one candlestick that we was just looking at on a 4-hour chart. If I go into that 1-hour candlestick and go down to like a 1 minute time frame, there are 60 candlesticks within that 1 hour time frame. If we went to a 1 minute chart and that one, you got to understand that all you're doing is zooming in. You breaking it down because you know how many minutes it is in an hour. So if you're looking at a 1-hour candlestick and you go down to a 1 minute chart, now you're going to see 60 candles. It just represents how much time has passed by within that candlestick. Okay. It's really not hard to understand. That's very easy, right? Y'all with me? Drop a W in the chat if you with me, if you understand time frames now. So if you put it on a 30-minute chart, each candlestick represents what? 30 minutes of time. If I put it on a 5-minute chart, each candlestick represents what? 5 minutes of time. You can change the time frame in which you're looking at. Money Magnets 2025. I know what it is. We attract money. We don't, we don't chase money. We attract it. If you chasing it, it's running from you. You know what I'm saying? Now that y'all understand time frames, and you know that I like using a 4-hour time frame because it helped me zoom out a little bit on the intraday, on the day-to-day level. I can highlight the bigger structure. Now, if you want the big picture and the real support and resistance, look at a 4-hour or a daily. If you want precise entries, you could use a 1 hour or a 15-minute inside the same structure. Okay. Now, every candlestick got 3 things to notice: the body, the wick. You know what I'm saying? The body, the wick, really 4 things: the opening and the close, the high and the lows. The opening and the close, the highs and the lows, is where the candlestick opened at and closed at, and how high it went and how low it went. Now, they call it wicks and shadows, but I'm just letting you know, some of these candlesticks got skinny parts poking out the top or the bottom. Those are wicks. Those are showing you how high the price went during that time, and it came back down before it closed. Or it went up, came back down before it closed, or it went down, came back up before it closed. So some of the green candlesticks got wicks on the top and the bottom of them. Some of the red ones got wicks on the bottom of them. That's just showing you that the price went all the way. The price opened at a certain point, and what happened was it went straight down, and it came all the way back up and closed. That's what created the wick on the red candlestick on the bottom of them. The green candlesticks, the skinny part on the top of them, what happened was the price opened, and it went all the way up and came back down and closed. I know this because if there ain't no bottom wick, then it didn't go down. It's not hard to understand. I'll teach you this outside the live stream if you got a hard time picking up on it right now. But just to keep it simple, the body is the rectangle and the wicks is the skin. You ever lit a candle? It's always a wick on the candle, right? That's the skinny parts. If it's red, it closed lower than it opened. If it's green, it closed higher than it opened. Okay? The top of the wick is the highest price that the price reached during those 4 hours. The bottom of the wick is the lowest price that the price reached during those 4 hours. So red mean the price went down, green mean the price went up. It's simple. This is simple. It's not complicated. All right. So a long upper wick is going to show you rejection from higher prices. The sellers push the price down after an attempt to rally up, right? And then a long lower wick is going to show you the buyer stepped in. I don't even want to confuse y'all with the wicks and shit. We just going to move on. I'm going to tell you about price structure another day. But now you know what candlestick. No, this is not a recording. D, this is live. Somebody might be watching the recording after I do play the record. I do post the recordings on YouTube. So somebody going to watch this replay and think that it's live because I just said that to you. But no, it's not a recording. But yeah, I'm just trying to teach you how to interpret a candlestick when you see it. A big body means strong buying or selling pressure. A small body with long wicks on either side is indecision. Okay. Now look at the moving averages. Look at the lines that's going through the chart, not the straight horizontal lines, but the squiggly lines that's in between 196 and 184. Right? So there's an orange line, a blue line, and a purple line going through the candlesticks. Those are EMAs. That's an indicator. It's the exponential moving average. Some of y'all been in my class long enough to know what that is. The EMA 9, the EMA 50, the EMA 200. Okay? Exponential moving averages. The important difference between an EMA and a simple moving average is that an EMA gives more weight to recent prices that makes it more responsive to current momentum. I'm losing my voice, y'all. Had a family emergency over the weekend, but it's all well. Excuse me. Okay, this is how I'm supposed to sound looking at it. But nah, for real though, the SMA and the EMA, they different because the EMA gonna give you more weight to recent prices. That's gonna make that shit more responsive. Like it's gonna react quicker to the current price. So the blue EMA, that's the 9. It tracks the 9 previous candles. The 50 EMA tracks the 50 previous candles. It's my midterm indicator. It's going to let me know the midterm trend, like the trend for the medium term type shit. The purple is the 200 EMA. So I pretty much explain it like this. The 9 EMA is the short-term momentum or like a scalper reaction type of thing. Day trading. 0 days to expire. That's what I use it for. or just to see where the price going right now. EMA 50, like I said, my midterm filter. I got the 200. I use that for the long term. So when the price is above all three EMAs, my bias is bullish. When the price is below all three EMAs, my bias is bearish. When they stacked on top of each other, like the small EMA above the middle, and then the middle one, all of them above the long one, that's showing me momentum across many different time frames. Now, the crossover matter. If the 9 cross up through the 50, that means, it's going to be a pickup in the short term. If the 9 cross down through the 50, it's going to show me short bias. And then the 200 is more important for structure. Like price crossing the 200 is going to show you a shift in the long-term trend on the time frame you're looking at. I hope I didn't confuse y'all. If so, inbox me. We'll get through this another time outside the live. Now, I want you to pay attention to where price is below the 50, where price is below the 50 EMA. Remember, the 50 EMA is shown to you on this chart as the orange squiggly line. You might say yellow, depending on whether you colorblind or not. But yeah, just pay attention to it real quick, right? Where price crossed below that. Now, it's trying to push through. Right now, it's trying to push through it. I'm just telling you what I'm thinking when I look at this. That's a classic retest of mid-trend resistance. All right, I'm trying to explain to y'all how to use the EMA as a dynamic support or resistance. Because if the price touched the EMA 50 and it reject, it's usually a good place to look for a reversal candle. Okay, that's how you use the EMAs, right? Now look at the horizontal purple price tag on the right. I put them there. These are support and resistance levels I want you to memorize from this chart. Because at the top, we got 201. That's a level of resistance. That's a major level of resistance. Below that, we got 196. That's the local resistance in a heavy area. And I got that marked right there because the price came down and came back up to that level to create a new level of resistance. Yes, this is NVDA simply. And yeah, the price came down from 206. It dropped down to 191, but then it came back up to 196. That made 191 a new level of support and 196 a new level of resistance. Price literally came right back down to 191 again. And it didn't reach 196. It actually broke below 191 and took us to the previous level of support, which was resistance because it broke above that level back then before it went up to 201. You with me? Y'all with me? Put a W in the chat if you with me. Put two W's in the chat if you're not. Let me know now. Let me know. So the way support and resistance works is like a floor and a ceiling. The price will bounce off these levels and it will reverse off these levels and it will react to these levels again once it gets to those levels again. Do you understand? I am inspired to empower. Please tell me ask me a question, please. What don't you understand about it? And I'll go over it. Nobody left behind over here. Tell me what you don't understand. Because you see how the price came up from 184 all the way up to 201? And then it came back down to 191 and it went up to 196 and it came back down to 191 again. In the heat of that moment, when the price came down to 191, the first time after it went up to 201 and it came down to 191, in that very moment, when it went up to 196 and came back down, we mark in 196 because this is an interesting level. This is an interesting level right here. The price reversed right here. And when it came down, I already have 191 marked. And if it stopped at 191, you can actually predict it to go back to 196. But if it doesn't, now you know to pay attention to 191. Once it breaks below 191 and closes below 191 on a smaller time frame, you would have made a shit ton of money from 191 to 184. Put a W in the chat if you understand. The difference in color lines. Those are the EMAs. Okay, so don't pay attention to the color of the 201 purple line. Don't pay attention to the 196 purple line. Like the color of it doesn't matter to you. It's just the line matters. I can make the colors the same color as Skittles if I want to. Okay, don't let that shit. You make the colors whatever you want. I just like to. I know that the purple for me, I put it there as a heavy. To me that just means these is heavy lines. It don't mean shit. It's just a line for support and resistance. Okay, that's what they for. But you can make it whatever color you want to make it. Don't let that part confuse you. You see what I'm saying? But now, hear me out. This is what I want you to do. This is what I do want you to pay attention to. The price came up to 201. Just pay attention. Yes, but you made decisions on price, not color. Exactly. Exactly. So I'm going to explain to you why. Because the price on the left side of this chart, originally it went all the way down to 178. That was like the 10th of November. That was like the 10th of November. Might have been the 9th. Go check to be exact. Don't quote me. But it went down to 178 and shot all the way up to 201. So now 178 to 180, that's a zone you want to pay attention to. When the price gets down to this level, it's something you want to pay attention to. I could actually bring the price from that bottom purple line. I could drop that down to 178 and say, okay, 178 is my level of support, right? I can use that wick on 178 right there at the bottom left-hand side of this chart. Not the bottom left, but the middle left-hand side. You see where the price came down to 178.92? I can put the purple line there. However, there's a new level of support at 180 that the price hit 3 times and bounced off of. 1, 2, 3. It dropped down from 184 to hit 180, came up. The next candlestick opened, it hit 180, came up. I mean, all 3 of them did. And so now if you look to the left and the right, I'm looking at the fact that between 178 and 180, there's a lot of buyers that take control. The price went up from 178 to 184, all the way up to 200. And the price came all the way down from 201 all the way back down to that 178, 180 level. And now we on our way back up towards 200. But after earnings, will it drop lower? Good question. That's really what's in the air. That's what we all talking about. That's what's in the air. That's what we trying to figure out, right? That's what we trying to figure out. Now, not just off price action, not just off of using indicators, but not just off of earnings alone. We definitely won't just use the earnings. What you think we're going to see on open? I think open is something that you should not think about trying to get rich overnight. And if you don't, you're going to get a lot of fucking money back. It's just dollar cost average on it. I don't know why y'all treating it like a meme stock is what's gonna make them call it a meme stock. Then when they call it a fucking meme stock, y'all know what happened after that. The dummies start selling off and shit because they think it's a meme stock, and I don't like that. They did that ever since GameStop took off. Now every time a stock about to take off on them, they call it a meme stock, and that's like a button that they press to get the price to come down to scare people away from it. But then like nah. You feel me? This ain't that. Open is a good company. Do your research on it. But yeah, I put them lines there. I just wanted you to know what support and resistance was. That's why they there. That's why they're there. They are levels where the price reacted at in the past. It either peaked at this level, it reversed at this level, or it consolidated. Past reactions are important, y'all, because the market remembers these moments. The market is going to remember them. Right? Traders who flipped profit on these levels did so because they anticipated other traders would react similarly. Sorry, that word whooped my ass too every time. Similar, goddammit. They're going to react similar. This is what I get for trying to be proper and a suburban dude. No, I'm serious, though. Pay attention to support and resistance. You can set support and resistance by paying attention to the levels that the price bounced off of. I'm gonna explain it to y'all like y'all was a kid. If you take a bouncy ball and bounce it in the house and it hit the floor and then it hit the ceiling, then it hit the floor, then it hit the ceiling, then it hit the floor and it hit the ceiling, ladies and gentlemen, what is it gonna go after it hit the ceiling? If you take a ball and throw it down some stairs and it hit one stair and it hit the next stair and it hit the next stair and it hit the next stair, what stair is it going to hit after it hit? Like, come on, let's make it make sense, right? I would play it up until earnings, and then once it goes up, I may bet to the downside, says Madasra. I hope I said your name right. I'll be butchering folks' name in here. Right? So now y'all, I hope y'all got a slight understanding of what I'm saying on that end, right? As far as the support and resistance levels. I'm just trying to show you the exact process, how to draw support and resistance levels, right? You just want to look at the spot that it's bouncing off of. You want to make sure that it's touching 2 or more times where the price reversed at. You can draw a line right under them, right across the touches. You know what I'm saying? You can adjust it to make sure that the wick is extreme if you conservative, or to the body if you prefer a strict method. Yes, Jay. Yes, Jay, I am. But yeah. So now if you look at the navy blue lines on the right-hand side of this chart, that indicator is called the volume profile. Okay. Now the blue histogram, that's what it's called, a blue histogram. I don't want you to confuse it with regular volume bars. This is going to show you how much volume is traded at each price level, right, over the visible range of the chart. Because the volume bars on the bottom is going to show you how much volume was traded during that time. These volume bars on the right is going to show you how much volume is traded during that price, at that price level. Y'all understand? It's going to show you how much volume is traded at the price level. The largest horizontal bar is called the point of control, or the POC. They got that same term in government contracting, but this ain't about that. On this screenshot, the POC is roughly near 196, about 195, 196 on the 4-hour time frame. So what does this mean? This is where the price where most contracts or shares can be traded in this visible window, the 4-hour time frame. So whenever you see high volume nodes, this is a fair value area where the price is going to spend a lot of time at this area. That's going to help you in a trade to know that. Low volume nodes are gaps in market interest, and price moves quickly through the low volume nodes. So I know when the price get to the short nodes, it's going to, like it did right there at the green candle by 180, from 196 to 180. How the price went up from 180 to 191. I said that in reverse. So yeah, it went up from 180 all the way to 191 within that 4 hours. Y'all might not trade enough to know how much money that is, but some of y'all do trade enough to know, how much money that is. So it pays to pay attention. It pays to pay attention. I want y'all to look at the blue bars on the right, above and below the current price. I want you to look at the cluster of long blue bars and how it's creating a value area right now. This is the zone where roughly 70% of the volume is sitting at right now in the video. We call this a value area, hot and value area low, the upper and lower bounds, because when price enters this value area from the outside, it's often going to go slow, or it's going to consolidate. We might consolidate Monday until earnings come out. And then you got the volume bars on the bottom. We also got the RSI indicator. Under the price pane, right up under there, we got volume bars going up, the green and red ones. Yeah, those are showing you volume per candle. Those are going to tell you how much was traded during that candle. If you combine those candlesticks, if you combine this with the candlestick size to read conviction. So I'm explaining y'all how to use volume for real. When you see the price moving on a candlestick and the volume is low, do not have fear. It's usually a small or weak ass move. Whenever you see the volume is big, right, there's a lot of volume and the candlestick is going to grow. There's a lot of volume, big volume. Pay attention to the volume. You can trade off volume alone. You don't need all these extra fucking indicators. A large green candle on high volume means strong conviction. A long candle on low volume means weak conviction or a possible lack of a follow through. Don't get confident when you see a big ass candlestick in a low ass volume candlestick. At the very bottom, we also got the RSI. It's the relative strength index. This is an oscillator that ranges from 0 to 100. All right, so if you look at that, it says 30 to 70. Whenever that blue line is under 30, the stock is oversold. Whenever you see that blue line over 70, the stock is overbought. Whenever it's overbought, you can expect people to start selling soon. Whenever it's oversold, you can expect people to start buying soon. Now, you take all these tools together and you read the visible chart out loud to yourself. When you start to look at it, you start to see, okay, I see support here. I see resistance there. I see the RSI creeping up on 60 towards 70. You know what I'm saying? I see high volume on the last candlestick that took us up to 191. I see we halfway back towards where we fell down from, right? What does that blue line represent? Momentum, the chosen one. It means momentum. Yeah. So, yeah, you start taking it all together. You start to see the point of contact is near 196. The EMA 9 has crossed toward the EMA 50, but has not yet beaten down, or I'm going to say beaten above the EMA 50. It ain't went above it cleanly enough for me. RSI is rising. Volume profile is showing us a large node at 196, 195, so we know that the price could consolidate at that area. Like I told you, when them blue bar, I use the volume profile to see how fast the price is finna move past a certain price, right? The next area is congested and will be a battleground. A battleground. I'm telling you, it's going to be a battleground. The price might trade a little sideways for a minute. Be careful. Be careful. Or it could take the fuck off, but just be careful. That's all I'm saying. We're going to turn the picture into a story, because every chart tell you a story, where the price came from, who was in control, what's likely next going to happen. You know what I'm saying? It's the market story. It's simple. You're going to look at the trend. You're going to look at the structure. Where's the liquidity? Where's the momentum? What is the trend on the 4-hour chart? What, zoom out when in doubt. Right? I want y'all to remember, long equals I'm going bullish. You bullish. Short means you bearish. And it's recovering. So I want you to pay attention to stuff like this, so that you could find swing trades on the higher time frame, and you could find entry levels on the lower time frame. You can actually get a better entry if you come down to a 1 and a 5. I'm sure y'all already know that, but just remember that when you in a trade. Remember that. Now, I'm going to find swing lows and swing highs. The swing low here was 178. Price made a higher low off that swing. That's a change in structure from aggressive selling to buying. But until price takes out the prior swing high above 201, the larger downtrend may still have some authority. Right? We got to break above 201. Excuse me. If not, we still in the downtrend. Test 196 and coming back down till we back up, says Allen. And I wouldn't be surprised. Yeah. I just want y'all to pay attention to liquidity and order flow. Pay attention. We got to take out 201. Otherwise, we still in the downtrend. So in plain terms, the market is in a corrective rally right now inside a larger downtrend. We can be optimistic all we want. This matters because the type of trades I'm going to take might not be the same as the ones I would normally take. I switch it up. I got different strategies, right? You might prefer to counter trend scalps near resistance, or trend following longs if the price breaks structural highs. If this shit go back towards the high, then yes, it's time for you to go ahead and do things different. You want to do things different. You can't do the same shit and expect different results. This is Webull. And when I do see it, I told y'all how I trade earnings. I use the strangle, sometimes the straddle, because we expecting a lot of volatility. So I'm going to strangle. We making money down and up. That's right, Alan. That is right. Now, momentum is going to confirm or contradict the structure. You see what I'm saying? The RSI is rising, which is going to let me know that okay, we are in an upwards push. But we also got to look at the volume. If we can move into 196 and you see volume starting to slow down, then that means it's going to come back down. If we see 196 on the price and you see the volume going up and the RSI going up, then yeah, it's going up too. Put it together. Put it together. So I'm gonna look at it I'm gonna actually plan from all different sides of it. Okay, just open my Thinkorswim, looking at pre-market. There is a long down tester candle. Okay, so I'm gonna look at it I'm gonna give you 3 different scenarios. Because if you fail to plan, then you plan to fail. So we gonna look at it from either way. I'm gonna have a plan for either situation. You see what I'm saying? So let's look at it if this is a bullish continuation. If the price break above 196 with the full candle closing on the 4-hour, on the 30-minute, on the 15-minute, and the EMA 9 is above the EMA 50, and the RSI is increasing, then I'm going to expect a run towards the next heavy node to up there at 201. I'm expected to go up towards 201, right? And that has to be confirmed with increased volume on the breakout candle. That's what I need to see happen. If all 3 of those things happen, then I'm going to take this back towards 200. I'll do like I'll do an in the money call. I know what it's going to do. Now, plan B. Plan B. And I ain't talking to you deadbeats when I say plan B. All right, so if price approaches 196 to 201 and you see a long upper wick on a 4-hour candle, right? Or a 30-minute, then with the red volume, or decreasing volume, and the RSI got to be flattening, like going in the middle or rolling over, heading towards the bottom, you can expect rejection. That is a place to consider buying a put or shorting this shit or fading it, whatever you want to call it, especially if you see that 9 EMA starting to cross below the 50. Been following you for a minute. Homie spit nothing but facts. That's what's up, Alan. I appreciate you for following me for a minute. Yeah, that's my plan B. Now, plan C. You got to have a plan C too. Right? I gave you plan A for if it's bullish. My plan B for if it come up to resistance. The buy puts. If it don't break above it, right? Excuse me. Now, if price fail at 196 and don't break above that previous level of resistance right now, that's why I got it marked. That's why I marked 201 and 196. Because the price came up to 196 before it fell down to 191 and came back up to like 194, came back down to 191 before it dropped all the way down to 184, before it dropped all the way down to 180, before it came back up to 191, which is where we at now, right? So we got to see if we're going to break above 196 next, the previous level of resistance. That's what we got to break above. So that's my plan C. If we fail to break above 196, we're going to drop back into the value area around the point of contact that I was telling y'all about, which is the largest blue candle, the largest blue bar on the volume profile on the right side of this chart. That's the point of contact, the largest one. So, yeah, if the price drop back into that area and further down to 184, 180, you can watch, you know what I'm saying? You watch for a wick or a bullish pin candle at those supports. Combined with rising volume, and then I can go back in for a long right there. I'll go back in for a long right there. And then on the flip side of that, if the bounce fail to form support and the price close under 184 with volume, I'm going to expect this shit to go down to 178 again. There you go. I got my plan A, my plan B, and my plan C. That's the point. You want to make sure you prepare. Proper preparation prevents poor performance. Right? That's a strategy for you. Quick little free strategy. I call it the volume profile plus support and resistance reversal strategy. That strategy going to use volume profile for you to choose your trade location. You can use the EMAs and the RSI for confirmation. You can use candlestick structure to help you actually know when to get in and when to get out, so you don't got to be confused about that. If you need this replay, it'll be on YouTube. I'll post a replay on YouTube if y'all want to go over it. Do some research, take notes. Like, let me see if what he talking about makes sense somewhere else. Like, let me back test it or let me ask somebody else, right? It is specifically not an opening range breakout strategy because I know a lot of y'all love that strategy. That might be the only strategy some of y'all don't got no strategy, don't got no plan. Y'all just pressing buy and sell. Y'all don't even have no type of edge in the market, none. And so a lot of people come in here and say things like, why you using indicators? Or why are you in here telling them y'all don't need all them indicators? No, you don't. But, you know, I'm telling y'all to use them until you don't use them, and you don't need a ton of them. You might only use 1 or 2, maybe 3. On this chart right now, I got the EMAs, the volume profile, the RSI, and I guess you can count volume, but I would have threw a MACD on here too, and you really would have thought I was crazy. But yeah, I want you to know that there's rules to it though. You can only trade at high value nodes, right? At proven support and resistance level. I'm only trading at support and resistance. I'm not trading in the middle of a low volume without having a clear plan, right? I'm only looking at trades once it hit this point of contact moment because I'm noticing once it gets to this level, it really moved from here to other spots. That's why I use the volume profile. That's why I use it. The value area extremes or horizontal support and resistance on this chart, we're looking at 196 and 201 and 184 and 180. All right, y'all with me? Then I'm gonna make sure I see a clear candlestick confirming after the level been touched. The confirmation, I need to see a rejection wick. I need to see a pin bar, like an engulfing candlestick or something. A close beyond or below the level followed by a pull back to that level. Don't just get in shit. Stop just getting in shit and then blaming. Listen, especially my students. Y'all know I'm on y'all ass, bro. Because I think I need to hold y'all hand again. We got to go back to grade 1. Some of y'all be making mistakes, and I'll be like, what's going on? This is not what I taught you. This is why having a mentor, we don't teach. Like when you get a personal trainer, they not there to teach you how to do push-ups and pull-ups. You already knew how to do push-ups. They there to make sure you actually do them. Because I know when I turn my back, you probably eating Buffalo Wild Wings and shit. Trading without a stop loss and whatnot. You know what I'm saying? So I'm also going to look for the EMAs to be aligned after what I just taught y'all about the EMAs. I'm going to look for the RSI to support the direction. And then I'm not going to risk more than 1% of my total account on a trade. This is by default. This is by default. I'm sorry. Don't do it. You shouldn't be trading. You won't lose money if you don't use the money. You won't lose the money if you don't lose. You won't lose the money if you won't use the money. But scared money don't make no money. We know that. And it takes money to make money. Sure, somebody asked me, how much can I get started with? Can I come in the game with $20? Yeah, you can come in the game with $20. If the stock costs $20 and then the price go up $2, you made $2 if you bought one whole share. Right? But if that stock go down $20 and D listed, you lost your little $20. Cool, what was $20? If a stock costs $100 and you only got 20, you can get a piece of the pie. But if that stock go up, you only made a small piece. So you really got to put, it's consistency. It's putting in that shit every week. Dollar cost averaging. I don't care if it's only $5. You should be investing in your future and your portfolio. You should have a portfolio. You really should. You should be building one. But yeah, me personally, I mean, some of us are conservative and y'all might use the less than 1%. If you aggressive, you might use 2%, 5%, 50% of your portfolio. Some of y'all full porting and shit. But you want to make sure you use a stop loss, man. And where you put your stop loss matters a lot, ladies and gentlemen. You want to place your stop beyond the recent structure. Everybody always asks, how do I know where to put my stop loss at? You want to look at the recent structure. I just taught you about support and resistance. For long trades, you're going to put the stop below the swing low or below the value area low. For short trades, you're going to put it above the swing high or above the value area high. Never place a stop too close to the entry, right? I'm talking about so that volatility going to hit your shit and you just liquidity in the market because you putting your shit too close to the entry on some trying to, you scared. Scared money don't make no money now. Don't make no money now. Don't make no money. Somebody asked me earlier, like, this shit is gambling. The way probability works, you'll fuck around and quit before you had a chance to win. The way trading works, like, when it comes to trading and you don't understand probability, you don't understand compound interest, you will quit before you get a chance to see your efforts compounded. You'll give up. If I told you I done said this shit 4 live streams in a row, I'm gonna come up with a new analogy, but I love it. If I had a quarter and we flipped that quarter and every time it landed on heads, and you made $3 every time it landed on heads, but when it landed on tails, you lose $1, you're going to want to flip that coin as many times as possible. But there's people out here who going to flip that coin, right? They're going to flip that coin. They're going to flip the coin 3 times and they're going to lose 3 times in a row and give up, not knowing that all it would have took was one more flip after that and it would have wiped out those losses, right? 2 wins wipe out 3 losses when you got the proper risk to reward ratio, when you're using probability to trade. This is math, right? I'm not making this shit up. It's not hard. It's not complicated when you're using the proper risk to reward ratio. When you are making sure that your losses are short and you cutting them bitches short, your losses are small, okay? And your gains outweigh your losses. If I'm cutting my losses short at 1%, and when I say 1%, y'all be like, damn, 1%, bruh. Do you know 1% can be $200 of a loss? Do you know 0.5% of a loss can be $100 sometimes? Like, I don't think y'all understand math. Like, some of us need to go back to school and learn percentages. I'm teaching that shit, but that day, hey now, teachers don't get paid enough. Y'all ain't finna do teachers. We don't do teachers like that now. We support the teachers over here. I'm just letting you know. If I have to teach you math again, I know something. What the E-mini doing Wall Street 55? It's on fire right now. Don't make me, hold on, let me pull it up while I'm talking all this shit. I ain't even looking at it. I ain't in no futures trade. As soon as I got off, you know how we get down. I was gonna go ahead and do my thing. I trade the micros though. Whenever I'm trading futures, I trade micros only for those that want to know how to pass an account. You doing too much with that. You ain't got enough. Y'all, not you, Wall Street. I'm pretty sure you rolling in M-Yums. But you ain't got enough money to be trading no minis. You might want to break it down to the micros. Make it make sense. Do 2-3 at a time and make it make sense. Then you can, when you get up to a comfortable level, still don't trade like you comfortable because that ain't what got you there. I don't know who the fuck in their right mind is trading the minis, man. Oh my goodness. Yeah, you a roller coaster rider, right? Is you gonna make a lot of money real fast or you gonna lose a lot of money real fast? It's the only way. It's the Mandalorian. This is the way looking at, right? Now, we went over quite a bit. I don't think I probably did leave a lot out, but it's cool. I just wanted y'all to know a lot of people move their stop losses in the wrong way. A lot of people don't use limit orders, but I expect y'all to use limit orders for entries when you can. It's going to give you price control. If you want to go long at 191, like let's say you want to go up, you think the price finna go up, right? You're going to set a buy limit at 191. If you're trying to catch a fast move and you got to enter immediately, you can use market orders, but you need to be aware of slippage. Right, so if let's say I think the price finna go up from here, but I think it's gonna come down first. So I could say, I do think the price going up, but let me get it for a cheaper price because I think it's gonna come down first. Right, that's what limit orders is for. Now, a common mistake is trading a level without confirmation. You almost called y'all something. You need to wait. Y'all, ladies and gentlemen, need to wait. If you enter early, you are going to increase your hit rate of a false breakout. All right, I'm telling you that. And don't risk too much. Keep your shit under 1%. This is going to keep you from overreacting. Stop moving the stop loss further away from a losing trade. Just don't do it. Stop chasing a breakout. Man, listen, this is easy money, y'all. This shit really easy money. I'm not perfect. Everybody make mistakes. Everybody gonna lose trades. I told y'all about risk to reward ratio. You actually can lose more trades than you win and still make more money. Oh, y'all don't hear me though. I don't want to turn this to no Calvary United Methodist Baptist Church sermon from Pastor Price. This ain't what this is. You hear me? That ain't what I'm preaching. I'm telling you, this is not complicated. We make it complicated because trading is 90% psychological. It is a battle between you versus you. It's a battle between you versus you. That's why it's so tough to make money in the market, because you're not disciplined. You start to see how, you knew better than before. You knew better than do what you did. You knew better. And when you do make money, you need to rinse, wash, repeat. Just do what you did to make that money. You're going to do it again. Now, there will be some losses. Cut the losses short as soon as possible. Who the fuck like taking a loss? It's almost like the people that I see who carry a lot of baggage, right? You carrying a lot of stress around, and carrying stress around and carrying a loss is like holding a 900-pound dumbbell, dragging it around, struggling, and it's hurting you, and you just won't let it go. Simply let it go. And I'm like, bro, let it go. You like, man, damn, bro, this shit's so easy to lose money. No, it's not. I'm watching you struggle carrying that weight. You do not make losing money look easy at all. That shit is not easy to do. Okay, don't be out here just losing money talking about this shit easy to lose money. The fuck? Do that make sense? Am I tripping? I don't think I'm tripping. I think the person. I don't think I'm tripping. No, I ain't asking y'all. Am I tripping? But I think, you know what I'm saying. I'm saying, and the rest of the world is fucking crazy. That's a Scorpio thing, though. We not always right. I can shut the hell up. I'm not always right. But now, right now, I'm gonna get off NVDA. We talked enough about NVDA. Y'all know enough. I'm gonna go right back to AI though. We're gonna still talk about AI because the AI boom is still growing. It's changing directions. People know AI big, but what most beginners don't realize is it's shifting from just being some cool apps and shit and some cool softwares that we use into actually building massive ass build outs, underground cables, huge data centers in your backyard, superconductors, not the kind my ancestors built, not I ain't talking about them, but still close to it though. Technology won't be as advanced as it was back then, but we getting close to it. Microchip servers and the raw metals needed to build all of this shit. I want you to think of it like building a giant digital city. Think about it. Think about it. Think about it. You don't just need programmers. You need land. You need steel. You need energy. You need copper, machines, construction, everything. Because of that, a lot of companies that provide the behind the scenes hardware, they starting to get more attention. We got raw materials like copper and aluminum. They starting to become more important. I think that got a big part in why they stopped making the penny too. Not just because it costs more to make. It costs more fucking money to make the penny than the penny actually worth. But I think they need the copper. Might be tripping, but yeah, I think they need the copper. It's more important now. We asking if these huge investments gonna pay off, which is actually creating a lot of opportunity and fear in the market because we asking those type of questions. This is why people talking about AI. This shit is not just a tech stock. You ain't just talking about a technology stock no more when we talking about AI. This is the whole ecosystem. This is his own ecosystem with a whole bunch of winners all tangled up inside of it. It's like a spider web with a bunch of fucking shit for the spider to eat on it, and you the spider. And the stocks is you finna make a lot of money, man, if you pay attention, ladies and gentlemen. And not to me, I'm talking about to the time and the day and age that we living in. You hear me? Also, the world has never owed this much money. We have never owed this much money, and it's becoming a problem. This is simple. Governments around the world then borrowed a lot of money. I'm talking about a lot of money, more than ever before. Now, when the interest rates was low, that wasn't a big deal. But now the rates done been high for a while. So the government's basically like somebody with a huge ass credit card bill, but they want to try to come at us about our credit and shit. But the government credit fucked up right now. Real talk. They credit score need to be ass. I wish I could tell them y'all shit at 349. And then the interest keep piling up. So that's creating, a market where we worrying about how countries gonna struggle with their debt. We really don't give a fuck, but markets worry about how if countries gonna struggle with their debt. Bond markets started to get shaky. And yeah, we do get a little nervous about how long the government gonna keep spending this shit though, because yeah, it don't just crash shit instantly, but it's gonna create pressure that build up over time. And to me, the confusing part is how the fuck is the U.S. economy still strong? And the jobs is still solid. And we still spending money like it ain't shit, but inflation ain't dropping as fast as we wanted to. That means the feds can't cut interest rates quickly. And why do we give a fuck about that? Because when the interest rates stay high, they can't borrow money like they want to. It get expensive. The stocks, they move real sensitive to damn near anything when moments like this happen. And then the companies that we treat as growth companies, they start to slow down. We get cautious. And if the market is stuck in a weird ass zone, the economy is good, but inflation is sticky. So everybody watching the feds like a hawk during moments like that. I'm telling you. But as a trader, I'm just buying in moment. I'm buying. We dollar cost average, and we buying whether this shit up or down either way as an investor. You know what I'm saying? We trade on the back end. I want y'all to understand that you are an investor first, not just a fucking trader. Be a trader on the back end. You trade all you want, cool. But you an investor. You own these companies. You own a piece of these companies. You're not just a consumer. You're not just giving the market your fucking money, because you are a gambler if you're doing that. You are gambling if you're doing that. I hope some of y'all taking the money that you're making from the trades at least and reinvesting it into the stock outright. Like, come on now. Don't get me started on how I gotta do. Now I know what I'm gonna talk about tomorrow. I ain't even gonna trip. I ain't even gonna go over it. I'm gonna talk about that tomorrow. But yeah, money itself is changing right before our eyes. This shit sound dramatic. I know I'm not trying to be dramatic, y'all. I ain't trying to talk your head off, but I'm just keeping it 1,000 with you. I'm being true. We are entering into a period where traditional stock markets. Who is this? Moonright. I'm about to see who this host is, y'all. I was like, who is this? I was going to accept it. I don't know who y'all is. Who you trying to get me the calls with, Sean? Invite. I don't know what y'all got going on. I hope the trade can give me freedom. Peyton John, you need a lot more than the quote-unquote trade to give you freedom. Inbox me your name and your number, and we're going to go over it. We're going to build you a solid financial foundation. That's what I do. I'm extending that to everyone, right? If you don't have a portfolio, if you don't have a trust, if you don't have a will, if you don't have life insurance, we'll go over all of that at the end of the segment. But for right now, I just want to talk to you about how money itself is changing. We're talking about digital assets, new financial technology, private markets, and the way we trade in the stock market. All this shit starting to blend together. It ain't about crypto all by itself. It's about the foundation of finances, or a finance period, evolving. We living in that. We seeing that right now. Think of it like the financial world switching from 3G to 5G. Y'all remember that? Like everything get faster. We got more digital shit. We more connected. And then it affects how companies raise money, how investors move money, how the market react to news. And it's not just a trend no more. It's a long-term global shift that we need to pay attention to. Peyton John, you close to being free though. It ain't about how much you got in the market. It's about what is your financial independent number. Tell me what's your fin. How much do you need to never have to work again? Everybody drop in the chat, how much money do you need to never have to work again? We always equate retirement with an age. It has nothing to do with how old you are going to be. You can retire as soon as you hit that FIN, that financial independent number. Drop it in the chat right now. Manifest it by typing it into the chat. Manifest it by acknowledging it by typing it into the chat. How much money do you need to never have to work again a day in your life? Manifest it by typing it into the chat. Solidify it. It ain't about how old you is, Peyton. It's about how much you need. Okay, that's what I'm talking about, Nancy. Manifest it. Amen. In the name of the Lord. Yes, Lord. 10 million, 1.5 million, 600 million. That's what I like. Killer Cam gonna get 10 million. Daily Profit gonna get 600 million. I Am Inspired to Empower gonna get 1.5 million. Easily. Antoinette gonna get 10 million easily. Because we not gonna fail to plan. Because we don't plan to fail. Do you think the more African Americans come into the market, it will become more rigged over time? No. No. The market don't give a fuck. No. If you really want me to answer that question, since you want to bring, I'm not judging you for that question. I'm gonna answer it honestly. If you want me to be honest with you, who do they say spend the most money in the United States? What do you know about the African American dollar? I don't want to bring it up, you know what I'm saying, too much to talk about that shit too much, but just answer that question for me and then tell me, what do you think could happen if we brought that money to the market? If we started to become investors instead of consumers? We are the ones that buying the Nike, that's buying the Cartier, the Gucci, the Louis, Fendi, Prada, Bed Bath Beyond, Burger King, McDonald's, etc. You name it, get the buying stuff. But I'm not here to talk about that, y'all. Don't get me. Do not turn me into no martyr. I'm not trying to be a martyr. I crash out and then I lose my whole page. TikTok won't let me turn up like that. It doesn't stay in the community. Hey, join the Discord though. We chop it up in there all day long. What I was finna say? Rent free. I was finna say rent free, but no, we chop it up in the DC. Freely. Right? Freedom of speech over there in my own crib. Ain't nobody gonna tell me what to do. It don't stay in the community. That's right, Killer Cam. That's the number one problem. But it will not affect the market as far as it being rigged. Like, the market manipulation is gonna be market manipulation, and it won't have nothing to do about no damn segregation. It ain't gonna have nothing to do with no race or no nation. It's market manipulation, and and it ain't market manipulation if I got some participation, but it's market manipulation, but it ain't got nothing to do with no. I'm just playing. But not for real. But there is a lot of manipulating that be going on in the market, though. It is a little rigged, but I ain't gonna lie about that part now. But it ain't got nothing to do with the color of your skin, okay? And I wouldn't lie to you about that. I'm the one that, don't get you talk to. I'm not gonna lie to you about that one. They not gonna say, oh, this is a black person taking this trade, so I'm about to make sure they lose money. Hey, go look up the Black Wall Street though. I do want you to go look up Black Wall Street and see what they did to us the last time we had shit popping on the Wall Street level. For those that don't know, just get on YouTube whenever you get time and say, what was Black Wall Street? Just type in Black Wall Street in the past. I ain't talking about trap. I ain't talking about Wall Street Trapper. I'm talking about Black Wall Street. Can somebody remind me the city that took place in? Who knows the city that took place in? We're not talking about, this ain't a history level, but y'all done turned it into one a little bit now. She done got me started with that one question. Who knows what city and state the Black Wall Street took place in? With AI, Tulsa. That's what I'm talking about. 835 Kiss the Cook, Tulsa. That's right. So go look up the Black Wall Street that happened in Tulsa. Go look it up. It don't matter what the color of your skin is. Go look it up. I don't care if you blue, or purple, yellow, white, brown, since y'all want to refer to yourselves as crayon colors and shit. Me personally, I don't care what your nationality is, okay? I don't care what your nationality is. Go look up Black Wall Street since you like trading and you like investing. Go look at what happened the last time we did it and wonder why we don't fuck with it now, and why we are traumatized now, and why we still licking our wounds from the last time we built some shit up and it got tore the fuck down. I'm gonna lose my page. Like, why y'all getting me all worked up? I'm really like, you know what I'm saying? I could have been an activist, but I didn't want to be an activist because, you know, it don't pay to be no activist, y'all. I'm about this current side. Call me a sellout for talking about, you know, this instead of that. But yeah, straight took it the fuck out the way. Straight got it the fuck out the way, Cam. Yeah, man, got it out the way. It's sad, really. You know what I'm saying? I ain't trying. I fuck around. You know, I get upset about it. You know, I get upset about it. But around the world right now, we got countries competing for AI leadership. They all fighting for AI leadership the same way they was fighting to be the first person on the moon. These countries are in a race to be the king of AI, the king of technology, damn near too. I know people think China winning or whatnot, but I'm serious. Around the whole world, they want they fighting for energy control, industrial power, economic dominance. So this competition is creating a bunch of trade barriers, like we just seen with China and whatnot. And they changing policies, and then motherfuckers clicking up. Oh man, what do you say? My new ops fucking with my old ops. Oh man, like that's what's happening right now around the world. So for investors, this means certain sectors gonna skyrocket. Some of them gonna drop suddenly, and yeah, a new law, a new ban, a new partnership, all this shit can move the whole entire industry overnight. Now I'm looking at energy and raw materials because those, you know, they quietly becoming hot again. It sneak up on beginners. AI need enormous amounts of what? Can y'all tell me? What does AI need a lot of to work? Let's put two and two together. Can anybody in the chat tell me, what does AI need a lot of? Tech Flu, you ain't answering my question. I asked you a question and you answering my question with a question. I'm sending you to the administrator's office. Energy, that's right. To run data centers, that's right, correct. It takes a lot of electricity. It takes a lot of cooling, a lot of metal to build the machines, a lot of materials to build the data center. So now people talking about energy the way they used to talk about technology. Where will all the power come from? This is money. Now you worried about you need to be worried about your portfolio. Commander, you ain't gotta worry about catching no dog. You gonna have to worry about a dog catching your ass. Now, I'm trying to put you on. You better pay attention. Who control the supply? Where will we get these metals from? Where will all the power come from? That's going to bring in new opportunity in energy companies, mining companies, utility companies, infrastructure companies. AI is not just fucking software. It's a massive physical machine that eats energy and metal. Everybody want to pretend they making money trading. Everybody want to play smart. That's right. But the problem is everybody is losing money, but only a few of them are still making money while they losing money, okay? Because you're going to lose money. You are going to lose money, but if you do it the right way, Tech Flu, you don't have to pretend you making money trading. Because you're really not making money. Your money making money for you, okay? And as far as playing smart, you know, a person could, I ain't blocking no words, TikTok. Nope, we not blocking no words. But as far as playing smart, you either is or you ain't. You know what I'm saying? So are you calling me smart? You feel what I'm saying? 'Cause I'm either you either is or you ain't. You either are or you aren't looking ass. Either one. But since you came in my classroom with that bullshit, I'm sending you to the administration office as well. I'm gonna call your mama, tell you be in my class with them outbursts, them remarks and shit, them little smart aleck remarks, and I don't appreciate it. You are now in school suspension. And yeah, ain't no snack time for you, bruh. Go ass to the back of the classroom. Now back to what I was saying before I was rudely interrupted. AI is a fucking machine that eat a physical machine, all right, that eats metal and energy. So right now, the whole market is shaped by AI growing into a real world infrastructure. So we think AI ain't something that's physical, but it's eating up shit like it's physical. We got countries drowning in debt at the same time. We got a strong economy. And then we got inflation being stubborn. We got money and markets evolving into a new digital era. We got the crypto shit to think about. We got global political tension deciding who gonna win and who gonna lose. Then we got energy and raw materials becoming the backbone of the future at the same time. They say you can't teach an old dog new tricks. I disagree. I think you can teach an old dog new tricks. That's pretty much what's happening right now in the market. That's what we're looking at. This gonna make all the old companies start to pump. Steel companies and shit, energy companies. Yeah. Yeah, we don't guess over here at Ironworth Trading, y'all. We prepare. We position ourselves like professionals. And we done already talked about a lot that's been shaping the economy. So we are ready. You know what I'm saying? We ready. I just wanted to take y'all through the real world that we trading in, not the TikTok version, not the social media version, the real version. We're gonna go over real shit. If you don't understand the world you trading inside of, you're not trading, you just guessing. And again, we don't guess here. I done broke down a lot of complicated stories in language tonight, so simple that a complete beginner gonna be able to follow it. And now y'all understand not only what is happening, but why it matters and how you supposed to react to it. This not a hype cycle. This not a bubble. This not a trend. This is the next industrial revolution that we living in right now. I'm happy to be. This is a time to be alive. What are you talking about? We got companies like NVDA in the middle of it. In the middle of it. Not the middle. In the middle of it. All right. Not because they cool or popular, but because they supply the tools that the entire AI world is built on. So you can think of them like they building a massive ass city. And you don't get the city without the roads, the power, the metal, the concrete, the electricity, the servers, the buildings, the cooling systems. And NVIDIA, they make the supercomputers that every AI company must use. This is why I'm watching the video like I watch the fucking weather. Right? I'm not just looking at their earnings. I'm looking at the entire direction of the AI economy. If NVIDIA show strong demand, the whole AI world gonna get a boost. If NVIDIA get weak in the knees, I can face sad, cause I'd have made some money off this shit. If NVIDIA show weakness, it's gonna shake confidence across the entire market. But here's the part I want you to remember. AI is no longer just technology. The shit done spilled into energy, materials, utilities, construction, manufacturing, national security, global politics, not just on your fucking chat GPT. This is not a one sector story. This is an entire physical build out of a new digital world that your sleepy head ass ain't even paying attention to. You ain't even paying attention to it like you need to be paying attention to. And everything is going to the beat. I'm just trying to get y'all to see, man. We talked about everything pretty much. I just don't want y'all to overlook energy, man. AI is a power eater, bruh. It run hotter than anything we ever created. Y'all, you gotta understand, like, what we dealing with this AI shit. This shit run hotter than anything we ever made. Everything. This shit needs stable electricity. How long? Can anybody guess how long This shit got to be plugged up to the wall. Wall Street 55, geothermal energy. You know what I'm saying? Can anybody tell me how much water it take to run this shit? Where they getting the water from? Wave energy. Y'all, this shit need This shit needs stable electricity 24/7. Now, the world is discovering that it don't got enough electricity for the AI future. Do y'all hear me? We realize that we don't have enough electricity for the future, for the AI future. So what do? What happens? Didn't I just tell y'all about supply and demand? What happened whenever the world need a bunch of something, but it's only a little bit of something that they need, that they want? That little bit of something becomes very fucking expensive and very valuable. So just like that, energy becomes king again. Not because of oil, not because of wars, not because of supply, but because the math demands it. The data centers need more electricity. They need more cooling. They need more backup energy, more infrastructure, more materials. They need more expansion across the fucking globe on the grid. If electricity is the blood of AI, then energy companies becomes the heart. AI might be digital, but this some physical shit. This shit being built with metal, bruh. Every new data center needs copper wiring, aluminum frames, steel structures, lithium batteries, rare earth magnets. Shit you thought was just rocks that you step over. Chip plants are giant industrial complexes. You thought this shit was just, you thought it was just building a factory in your backyard. Nothing digital happens without the physical materials. So for the first time, technology is making mining look, technology is bringing sexy back for mining. Yep. It's bringing sexy back. No, dead ass. Technology is making mining look sexy again. Do you understand what I'm saying? Y'all understand how wild that is? A lot of companies that did copper out of the earth suddenly might benefit from AI. All right, so keep your eye on them cheap ass companies right now. I'm telling you, you're going to come back and be like, bruh, thank you. That's how big this shift is. This is not financial advice. I'm just trying to keep you woke. It's 3 o'clock in the morning, too. I ain't even going to be on here that much longer. Hit the follow button if you enjoy the show tonight. If you learn anything new, hit the follow button. I would super duper appreciate it. I would actually be highly offended, right, and distraught if you didn't hit the follow button after everything I done said to you tonight. I'm like, what the hell wrong with you? I'm actually be upset, and I'm going to make sure I hunt you in your dreams like SpongeBob. If you don't hit the follow button, no Diddy, no Freddy Krueger shit. You feel me? I'm just going to come in there and give you a swirly. We're going to be in high school all over again. It's going to be your worst nightmare. I'm going to put your head in the... I'm just playing TikTok down. Man, so let me stop playing with y'all. I'm just joking, y'all. I'm just joking. Thank you for the follow, Lulu. I appreciate you. Thank you. Now, I'm pretty much pointing out how AI is, y'all. Y'all know what's going on, but the next thing is the global competition. We got a lot of countries fighting for chip dominance. They all want to be the AI leaders. They all want technology control. They all want to be energy independent. They all want supply chain stability. This is the competition that we in, just like they was in competition to get to the moon. And it's funny that we call it going to the moon whenever some stocks go up a lot, because everybody trying to be the first to moon again. All over, they trying to moon again. So it's going to drive a bunch of new laws coming into place. They banning new shit. It's building new relationships, and it's starting new problems. It's not separate from the stock market no more. Politics is literally driving the market. It's crazy. This is a damn near a news-driven market. So when a country, one of my students was like, bruh, so what do you mean the markets don't usually move like this? Like, this ain't usually how the market move? No, not quite. I mean, shit, the way COVID recovered, it don't usually happen like that. It usually take longer to recover than a V-shaped recovery like that. Like what we just seen from April to now. Wall Street 55 said China DeepSeek running their autonomous military robots. And y'all do not want no motherfucking smoke. Military robots. I don't want no smoke with the autonomous military robots. I'm gonna tell you right now. I'm gonna figure out how to make something to go against that shit. I don't want nothing to do with none of them. You hear me? You know what I'm saying? We're gonna throw a cup of water on their ass and keep it moving. You know what I'm saying? That shit better be waterproof. But no, dead serious though. Y'all know I'm just joking, but I'm serious though. Whenever a country restrict they chips, the market react. Whenever a nation sign an AI partnership, we react to that shit. Whenever the government fund a data center expansion like they did with Intel and all this extra shit, the market react to it. So we got to think globally, not just locally. You know what I'm saying? But the world is drowning in debt. The governments, they asking and keep asking and keep asking and keep borrowing huge amounts of money. Now the interest rate's high. So imagine taking out a giant ass loan and then your interest rate double. That's what the government experiencing right now. That's making a lot of pressure, a lot of political tension. They arguing all this extra shit, tighter budgets, lower spending power. It's making the economy fragile, but for some fucking reason we still up. Debt don't cause a crash instantly. Not that I'm expecting that to happen instantly, but it does act like slowly tightening chains. Like, you know what I'm saying? It's like we're not supposed to be comfortable in this shit. Inflation is not gone, man. This shit is quieter, it's stubborn. So when inflation refused to fall, the Federal Reserve gonna keep the interest rates high. And the high rates mean expensive loans, weak small businesses, and a lot of pressure on the technology stocks. That's why they keep calling this shit a bubble and all this extra shit. And then it's gonna make y'all very cautious as investors. You're gonna be cautious. And it's gonna make a weird ass situation. The economy is strong, like right now, but the inflation is sticky, like right now. So the Fed might not cut the rates as quickly as we fucking need them or want them to. It's gonna be a tug of war between. Just know it's gonna be a tug of war. I don't even give a fuck who, but on both sides, it's gonna be a tug of war. When you think of AI, I don't want you just to think of apps though. I don't want you to think just. I need you to think of the whole damn system, y'all. That's all. That's all. And think about the energy. We talked about it. We talked about it a lot tonight. I pretty much went over everything I need to go over. I just wanted you to think about how smart money thinks. You know what I'm saying? And stop trading like, the dumb money. And I ain't talking about the movie on Netflix. We got to make moves that beginners don't even think about. We not just buying NVDA. I'm not just buying one chip stock. I'm going to buy chip manufacturers. I'm going to buy chip equipment companies, data center builders, energy suppliers, mining companies, infrastructure companies. I'm looking at all this shit. Right? I ain't saying I'm going to spread myself out over diversify. Powell out in May, right? Trump replacing someone who's slashing like crazy. Rio. If he do that, that'd be funny as hell. That'd be funny. But I wouldn't, like I said earlier, I wouldn't be surprised though. But yeah, I'm not just buying NVDA. I'm fucking with NVDA, but I'm not only buying NVDA. You know what I'm saying? It's not the only one I'm buying. Nah, it's not the only one I'm buying. Yeah, I'm going to add more energy exposure to my portfolio now. You know what I'm saying? Because energy wins. Energy wins. I repeat, for the people in the back, I'm going to add more energy to my shit. When AI grow, when inflation stay, when the politics shake the markets, energy going to become the anchor. I'm telling you, technology and healthcare, keep an eye out. No doubt, Lulu. I was just telling them about HIMS, Lulu. HIMS. Lulu, they gonna look back be like, man, HIMS was so cheap. I wish I had just got some of it. That's where it's going. HIMS is like the net. It's like the Amazon of the healthcare industry in the future type shit. Like, cause of what they doing with that there. SoFi as well. SOFI. But don't get me to doing call outs and shit. You know what I'm saying? I don't like call outs. I kind of just I met a guy on TikTok Invited him to the Discord. Man, as soon as he got in there, he went to slanging call outs like a dragon. And I'm talking about telling people what to buy left and right. And I'm like, you know what? I don't want to kick him out, but we don't do that over here, bro. We teach people how to fish. We don't just give them fish. Because then when you tell them what to buy, they buy the wrong thing. Cool, they make some money, cool, but they don't make no money. You just told 400 people to get some shit like I ain't sanctioned. That I'm liable for? No, sirree, Bob. So yeah, that's, I don't like giving call outs, y'all. I like to show y'all. Y'all saw how I did it. We went over the whole stock chart tonight. I gave a whole crash course on how to read a stock chart, right? And I didn't just tell you to buy NVDA. Y'all see how we doing it over here. This shit class for real. And it's also, I tell them all the time, this shit like Harvard over here, right? Everybody can't get in. This shit like Burger King. No, you cannot have your way. This shit is not like Burger King. I mean, you cannot have your way. You feel me? That's how I look at it. Because people will treat you like shit because they feel like the customer is always right. But anyways, I got really off subject. Sorry. Anyways, like I was saying, energy stock's the one you want to pay attention to. And I'm also going to focus on quality companies. I want companies that got real profits. They got a strong cash flow. I need companies that got stable leadership, right? Consistent demand. What is a company that don't got consistent demand? Name a few companies. My sister was like, "Sid, should I buy Foot Locker?" No. No. Family Dollar, Dollar General. Why you want to buy all this stupid? I spent a lot of money there. You said, get the ones I spent a lot of money. So get your ass out of Foot Locker. Sis, get out of Foot Locker. Hey, did the NVDA have its earnings report yet? No, that's coming this week, Mr. Nice Guy. I'm looking at this thing going down yet in price. Tesla has no consistency, says Mr. Nice Guy. No, that's this week, actually. That is this week. But I just was letting them know I'm focusing on quality companies, not just the big dogs that everybody always paying attention to. I just know that the high rate environments kill weak companies. So professionals going to avoid them out the gate. I'm going to keep more cash than usual right now, y'all. I think this is not financial advice, but if you were smart, this is my smart move number 4. Keep more cash than usual right now. Okay. Cash earns money right now. Cash earns money now. Cash is protection. Cash is opportunity. Cash is ammunition. This is how I survive volatility. Okay? The market gonna move fast as fuck. I'm gonna adjust my positions. I'm gonna hedge. I'm gonna take some profits here. I'm gonna reduce the risk there. I'm gonna re-enter at better prices. This is not a lazy market. This is an active market. You cannot sit the fuck back and just do nothing. You got to do a little something, right? You got to do nothing from nothing leads to something. So I think it go like that. I don't know, but you got to have some shit. All right, now they have too much shit going on this week for us not to pay attention. All right. So as a smart trader, I'm going to hold my long-term positions. And whenever there's a big ass mega trend, I'm going to trade my short-term positions based on momentum. That's going to give me steady growth on both ends. I got safer exposure. I got consistent cash flow. It's a healthy balance. It's how I'm going to stay alive. You see what I'm saying? I just want y'all to start thinking like a fucking professional, excuse my French, and not a gambler. We walked through the world you live in tonight. We talked about what forces shape the market. We talked about the opportunities that's coming ahead, the dangers that lie beneath the fucking surface, excuse my French again, and the strategies that we need to use to survive and prosper through it. Because if you fail to plan, you plan to fail. And proper preparation prevents poor performance. If you understand these ideas deeply, you're going to stop chasing and start recognizing cycles. You're going to start seeing patterns and the opportunity the way the professionals do, right? The market don't reward speed, y'all. Chat, the market does not reward speed. It rewards understanding. It rewards patience. It rewards strategy. You are now better than the average trader. You now see the world clear. You see it more clear than most investors. And now you building the mindset that creates long-term winners. Put a W in the chat. Confirm it. Put you a winner, right? Type in W for winner. Put in and do it for the sake of engagement, right? That's all I ask. That's like, damn, you did all that and all you want me to do is put a W in the chat? Yeah. And hit the follow button. Show some love. Show some support. It is free to show support. It don't cost nothing for you to press the follow button. It don't cost nothing for you to tap the screen a few times. It don't cost nothing for you to share the live out. Y'all, I am 20 followers away from 7,000 followers. And I got 37 people in here right now. So I know 20 of y'all can look out for me and hit that follow button so I can hit that 7,000 mark tonight when I get off the live stream. I would super duper appreciate it. You know what I'm saying? Yeah. Yeah, I would. I would. Most of us was never taught how to win with money. We was taught how to work. We was taught how to survive, not how to live, not how to strive. We was taught how to stress. Nobody taught us how to grow, how to build, how to protect. Some of y'all were. I have nothing against the people born with a silver spoon in their mouth, because I promise you one thing, my nephews and nieces and my grandchildren one day will be, they going to have the same effect, right? They're going to be born with that shit in their mouth too. So I respect it, but you got to learn how to keep it and pass it down. Nobody taught us how to grow, how to build, how to protect, how to pass down wealth. So our children start life 10 steps ahead instead of 10 steps behind. And that's why so many of us feel lost without money. Not because we dumb, not because we irresponsible, but because the education was never given to us. And that's exactly why I'm here. I want to mentor you. I want to guide you. I want to walk with you. Nobody did it for me. So at Ironwork Trading, we don't just talk charts and candles. This is each one teach one. Iron sharpens iron. We build people up from the ground level, financially, mentally, and generationally. I want to mentor you so you don't have to guess. I want to mentor you so you don't have to repeat the same mistakes. I mentor you so you don't have to waste years by doing trial and error. My job is to simplify everything, show you what actually matter, help you to build a real plan, help you stay consistent, help you protect your money, help you grow your money. You don't need to be perfect, but you do need guidance. Before we talked about stocks, right? You know what I'm saying? Before we went over, I done went over stocks already, actually, and portfolios. But I want to make sure we go over building wealth every day. Every time I go live, we talk about protecting what you already have. Nobody tell you that part, but your foundation is weak as fuck. Your whole financial life is shaky without the life insurance part. Not about death. This shit is about protection. This is about making sure your kids never start from zero. You want to trade, but you don't want to take care of the priorities. That's bullshit. This is about creating instant generational wealth, right? Even if life hits your ass unexpectedly. I explain, actually. I don't expect y'all to get shit because I explain everything clearly. No confusing terms, no pressure, clarity. If you have a business or you own your car, you own your home, but you don't have a trust, let's get you together. A trust is going to keep the courts out of your money. It keeps the government out of your assets. It transfers wealth quietly, cleanly, efficiently. This is what wealthy families use. Inbox me if you need any of these things. Yo, send me your number and the best time to call you. You deserve that same protection. Do you have a will? A WILL, not WHEEL. WILL, a will. A will is going to keep your family from fighting, from struggling or guessing who gets what. What? You think that shit ain't important? It really is. I'm telling you. A will is going to give you direction. You get to decide what happened to you. Imagine something happened to you and your family fucking arguing over whether you're going to get burnt or buried. And you want to get one or the other, but they don't really know. You writing it down don't count now. Right? I'm gonna change the subject. I just wanted to make sure y'all know that this is the person you can come to. I'm gonna help you get a will. I'm gonna help you get a trust. I can help you get life insurance. I can help you open up an investment account, a retirement account, a Roth. This is what I do. This is what I do. We can talk about growing your money though. I'm gonna get back on subject. Portfolio building. Too many people get intimidated by investing. They think it's complicated because the internet make it look complicated. But when you got a mentor who simplify everything, it just become easy. Y'all saw it yourself since you been in the live, right? I'm gonna walk you through picking solid companies, building long-term positions, understanding timing, avoiding emotional mistakes, managing risk, staying disciplined. You don't need a lot of money to start, but don't think it don't take no money to make no money when you know good and damn well to do. You just need structure. That's what I give you. I'm gonna be honest with you. A lot of people struggle because they credit and they budgeting is out of control, not because they stupid, right? It's not because they stupid. It's not their fault. Nobody taught you nobody taught us how credit worked. Nobody taught us how to build it. Nobody taught us how to repair it properly. But I do. I learned. I went and studied consumer law. I'll help you remove negative items the right way. I'll help you build a proper credit mix, raise your score consistently, budget without feeling restricted, control your fucking money instead of letting the money control you. When your credit is right, your options grow, and then things get cheaper and life get easier. This is why mentorship matters. When you work with me, you're not doing this alone. You're not trying to figure out 20 financial topics by yourself. You're not stressing over confusion. You got somebody who break it down slowly, show you step by step, check on you, explain without judging, support you like family, keep you accountable. I want to see you win. I want to see your kids win. I want to see your last name win. If you ready for guidance and you tired of financial stress, if you ready to build on a foundation, fix your credit, set up insurance, create a trust, grow your portfolio, and actually have somebody walk beside you the entire way, I need you to do something. Inbox me directly. I need your name, your phone number, your email address, and the best time to call you. I'm going to put you on my schedule. I'm going to reach out to you personally. We're going to talk. We're going to build your plan. We're going to move step by step together. Don't overthink this shit. Don't psych yourself out. Don't wait for the perfect moment because that don't exist. Your financial future changes the moment you choose to change it. Inbox me now. Let's get your life on track together. We don't just teach wealth over here. We build it. All right, y'all enjoy the rest of y'all day. It's 3 o'clock in the morning, Monday night, November 17th, 2025. We're going to make today twice as good as yesterday and half as good as tomorrow. I hope y'all enjoyed the show. Hit the link in the bio and please connect. Good night.